Welcome back to Summer School E-Commerce Ops Edition. Excited to have you here today. I know you've been hearing from me and our incredible partners over the last few days. Today, you're just going to be hearing from me as I take over the mic for TaxCloud's very own session on all things sales tax compliance. Now, today's not going to be about the basics of sales tax. We'll cover a little bit of that. My goal today is to give you some actionable tips so that you can know how to stay compliant as your business grows. And, just like every other session in this series, our goal is for it to be very practical, tactical, and digestible so that you can listen to this in less than 15 minutes and take at least one thing you can implement in your business ahead of the busy Q4. So, like I said, this isn't going to be about the basics, but I am going to cover some of that, set the foundations, and then we'll get into some of these topics that are going to come up as your business grows. So let's talk about where the sales tax confusion comes from. I know if you're listening today, it's likely that sales tax might not be your favorite topic to have to spend time on. And I know that is likely because it's a very complex topic in nature. And I don't list all of these things out to scare you or add even more confusion. The goal here is to really relate and acknowledge that we understand that this is a confusing topic. And our goal here at TaxCloud is to simplify it, help you understand what you need to know and how you need to take action as a business. So there's a couple of reasons why the confusion comes around sales tax. Number one, there was a really big shift in the market back in 2018 with the South Dakota versus Wayfair decision. Now, the simple explanation of that is the change there really brought into terms this topic of economic nexus. And I'll talk about that in just a second, but that was a major change in the landscape back in 2018. Now, when you think about selling in the US, you might think 50 states, 50 rules. And that's not necessarily the case. There's actually over 13,000 jurisdictions to keep track of when it comes to sales tax. And those jurisdictions all have varying rules, thresholds, and rules that might change regularly. Sometimes it's a very small change, sometimes it's something more significant. And of course, as we'll talk about today, as your business is growing, as you bring on more sales, that can mean new obligations for your business. So again, this is all to say that we understand that this can be a challenging topic to cover, and we want to help you understand what do you actually really need to know in your business. So when it comes down to sales taxes, there's really 4 key concepts you need to know. Number one, Nexus. So a term you'll probably hear me say many times today. Essentially what Nexus means is you have an obligation to collect sales tax in a state, and that's based off of whether you have physical or economic nexus. Physical nexus is essentially if you have your business based in that location. That could be an employee based there, that could be an inventory or a warehouse, just for a few examples. Economic nexus is based off of states that you're not physically located in, but you are selling into, and you're surpassing a specific threshold. Typically, that threshold is around the number of transactions or revenue that your business is doing in that state. So once you know that you have nexus in a state, so again, that means you have obligations for sales tax, you next need to know about your taxability as a business. This is based off of whether your product or service is actually taxable based on a jurisdiction. Once you know that that product is taxable, you have nexus, you now need to begin collecting and remitting. What that essentially means is you need to be calculating and collecting sales tax at purchase and then remitting that to the state. And then the last concept that I think is the least well known on this list is the Streamlined Sales Tax Program. Now what this is it's a program that 24 states participate in, and it helps to really simplify compliance for your business. Instead of having to deal with each of these states individually, you can actually do that all in one place through the SST program. The benefits of working with a provider like TaxCloud, who is a CSP in the SST program, is that we can actually file for you for free in these states. So the goal of this session is not to pitch TaxCloud, but if you aren't using TaxCloud today and you want to know more about the SST program, we'd love to chat, so feel free to reach out. But now that we've covered the basics, let's talk about some of these more tactical topics. Now, as your business is growing, you might start to sell on more than one platform or channel. And I'm going to use a couple of examples to explain this one. Let's say that you are a t-shirt company you're selling t-shirts on Shopify, and you're doing that all direct to consumer. So you get started out, consumers are coming to your website, you're transacting on Shopify, capturing sales tax all directly within that one channel. Now, as your business is growing, you start to get into agreements with maybe wholesalers or retail. And maybe you have agreements there that go through invoices. And now you're creating those invoices in QuickBooks Online. Now you have a scenario where your business is transacting sales on two different platforms. Both of those platforms need to be collecting sales tax at checkout. You need to be capturing that and remitting it to the states. So that's the first one I want to talk about. You as a business are selling on these different platforms that you manage. Now let's say that your business is selling on marketplaces. There are a lot of different marketplaces, but some of the most commonly known are Amazon, Etsy, eBay, Walmart. These marketplaces are called marketplace facilitators. Essentially what that means is that Amazon, for example, is the one that's actually required to collect and remit sales tax on your transactions on that platform. So the nice thing is you don't have to worry about, calculating, collecting, remitting those sales, but you do still need to track those orders because your marketplace orders count towards your overall Nexus exposure as a business. So what you need to know, essentially, as you're selling on different platforms, different marketplaces, as a business, it's important to have a holistic view of all of your sales across these channels so that you are reporting accurately to the states, but also on top of your overall Nexus exposure as a business. So that's multi-channel selling. The next thing I want to talk about are voluntary disclosure agreements. What that is the formal arrangement between you as a business and a state tax authority. You'll typically navigate a VDA if you recognize that as your business has grown, you may have missed some sales tax obligations in the past, and you want to work with the states to come to an agreement so that you can move forward and have your business compliant within that state. The benefits of coming forward with a VDA is that the states encourage you to voluntarily disclose, and they do that by providing different incentives. So if you recognize that as your business is growing, you missed sales tax, let's say in a particular state, you can go ahead and start a VDA with the states. That's going to help you in a couple of ways. It's going to help limit how far back the state may look. It will help reduce or eliminate certain interest or penalties, and of course it's going to help you reduce the likelihood of a full state audit, which can be a lot more costly and time intensive for your business. So as you grow, you may have missed some past due sales taxes. A VDA is going to help you settle that with the states. If this is something that you need to tackle in your business, we always recommend not waiting until you're contacted and working with an experienced partner. So if that's something that you need to navigate in your business, reach out to us. We'd be happy to provide recommendations. We know that this is something that can be tricky. So if it comes up, something for you to be mindful of as you operate your business. Now that we've talked about multi-channel selling, we've covered VDAs, another topic to think about is geographic expansion. So of course, there's a lot of other places you could be selling beyond the US. Today, I'm going to share some tips around what to do if you're selling into Canada and what are some of the key rules and terms that you need to know. One thing you need to know is that it is quite different than the US. Instead of one set of rules, Canada has multiple different tax types. As you can see listed out here, there are a federal sales tax, which is most commonly called GST, provincial taxes, which is PST, or you have a combined version of federal and provincial taxes, which is HST. I'm not going to go into all of the details, but you can also see that things may get a bit different too, depending on the province, like Quebec and Manitoba, who have their own systems and rules entirely. The place where it starts to get tricky and pretty different than the US is that you may be required to register once you hit 30,000 in sales across a 12-month period. So this is going to be across the entire country of Canada, not per province. So if you do surpass that threshold, you may be looking at needing to register, starting to collect and remit within Canada. But it's not just about sales tax threshold in Canada. The CRA is going to look at whether or not you are carrying on business in Canada. So when it comes to any of your federal sales tax in Canada, it's based off of first whether or not you carry on business. More commonly than not, that's going to look at whether or not you have a physical presence, whether you store inventory, maybe you use a Canadian fulfillment center, or have a local office or employee. If you meet any of the conditions for carrying on business in Canada, you will be required to register for those federal sales taxes. If you do not, you actually don't need to worry about GST or HST, and you need to think about those provincial sales taxes instead. Now, I know I've shared a lot of different acronyms on this slide here, and in the essence of time, I'm not going to go into all of the details, so we will link out a guide we just put together that talks about everything Canada sales taxes as a US-based business, so I encourage you to take a look at that and reach out to us if you want any help navigating this or have questions. We'd be happy to chat. And speaking of expanding across borders, let's talk about tariffs, which we know has been a topic that has impacted your businesses quite a bit this year. I know there are a lot of considerations for you to be thinking about this. So what does it mean when it comes to your sales tax obligations? The nice thing is that this is actually probably the most simple slide of them all, is that, more often than not, sales tax is going to be calculated based on the total price of an item. And most of the businesses that we speak to are going to bake any price or any cost of tariffs directly into the price of an item. So if you're doing that today, again, if you're accounting for tariffs in the price of the products or services you're selling, you actually do not need to take any action when it comes to that in your business. However, if you are potentially invoicing and maybe you list tariffs as their own line item, there are different taxability codes here. So if you're a TaxCloud customer or user, we've noted this as a recommendation. So this is only in the event, again, as I mentioned, that you are listing tariffs out separately. You can use that taxability information code and we'll be able to handle the rest for you. So I know that we have covered a lot of these different areas. Again, the goal of today is to know what to look out for as your business is growing and it's expanding. And the last thing I want to leave you with is our advice around being audit ready always. When it comes to sales taxes, you want to be proactive and know that it's taken care of so that you can avoid the scenarios where you have to go through a full intensive audit with one of the states. So how do you become audit ready always as a business? Number one, you want to be tracking your Nexus. I've talked about that quite a bit, making sure you know where you have liability. Number two, you want to be documenting. So if you are selling exempt sales, making sure that's documented, making sure you're keeping track of your exemption certificates. So when and if the time comes, you can share that directly with the states. Well, you want to lean on automation when it comes to your sales taxes, right? Helping you reduce any manual errors. You also want to make sure that you are spending the time, checking in each month, each quarter, and just kind of reconciling your sales taxes to make sure that you can catch any potential issues early. So on a similar note, we know that you have plenty of items on your plate as a business owner. So, how do you make sure to, manage your sales taxes well and avoid later issues? It's just checking in, staying on top of things. Even 15 minutes a month to check in is going to help you avoid any bigger issues that may come up in your business. So I'll leave you with these couple of takeaways. As I've shared a few times, you want to stay ahead of your exposure as your business grows. You want to get it into a rhythm where you're checking in, reconciling your compliance. As your business grows, it's going to come with new tax challenges. So I shared quite a few topics to think about as you expand. And lastly, work with a partner you trust. You want to have peace of mind when it comes to your sales taxes. So if you're not working with us here at TaxCloud today, we'd love to chat with you. We really like to simplify things for you. We want to help give you that peace of mind for sales taxes so that you can get back to everything else you need to do as you operate your business. So I hope you found this session valuable. I'm looking forward to being back tomorrow with our next session. If you have any questions, feel free to comment below and we'd love to chat with you.